and will be taken. Did not expect the mayor to be here this evening, however he is, so we do not need to assign a temporary presiding officer. Roll call vote. Well, before I get to that, I guess Vice Mayor Lord is at Town Hall up in Flagstaff, so she won't be, or actually Grand Canyon, so she won't be here today, and we'll excuse her from a meeting when we get to that. We have only one item on the work session, and Terry Canada, you have that one, I believe, and that's first quarter financial update.
Good evening, Mayor and Council. Larry has instructed me to talk real slow because we have the whole hour, and I tend to talk real fast, so if you need a reminder, slow me down.
Need the mic a little closer to you.
And I need to talk louder. We're going to cover a number of things. Like I said, I don't think it's going to take the full hour. I have a presentation that is somewhat in line with the report that you all probably have received. So if you have any questions, I think it's probably easier if you just ask them as we go. It might be easier than me trying to flip back through the report and find the information later. I'd like to review the major revenue sources for general fund, the expenditures by category for general fund. I'll give a little background of each and kind of how we're faring as far as month ending September for fiscal year 11 is. Any of the budget trends that we've seen. At this point, I think we've done all the quarterly reviews with the departments, with the exception of one of the smaller departments, so I can share with you some of the information that we've discussed over those meetings. And then I'll talk a little bit about the operating funds. Again, they're at quarter of the year. Major operating funds, HERF, water, wastewater, sanitation. It's really nothing at this point going on with stadium. Most of that activity hits probably after the first of the year. If you have any questions, we probably can take them, but I don't have a lot to say about the stadium. And then we're going to talk a little bit about the first quarter budget transfers. And this is kind of a new item here. And I'm going to encourage you when I get to that part, we also have the budget transfers listed on consent agenda. So if you have any questions, it's probably best we do that in the work session. We can probably have a little more dialogue on those. So with that, this is basically the overview of how we came in at first quarter. The revenues, as you can see, are up at 101%, which is just great. You know, I'm going to say that it's attributed to we're doing some better estimating here and forecasting. There was a $153,000 variance. I'm going to talk a little bit about the major revenues in a minute. So you can see expenditures by categories, we're basically at about 20%. So overall, if we were just balancing these two things out, which of course we have other things in play, there's debt that's not listed here, interfund transfers, but as you can see, revenues to expenditures were probably on the positive side.
Real quick question, Terry. On the revenues, does that general fund, does that include construction sales tax, that $11,617,000?
It does.
All right. Can I make a suggestion? I think since the construction sales tax is typically used for one-time expenditures, it would be helpful to get an idea on that variance on what's operating and what's one-time. So if you would just split out, at least for me it would be helpful if you split out the general fund revenues excluding construction sales tax and then with sales tax, because that tells me whether that variance is operational in nature or capital in nature, which would require two different approaches. So
okay.
I think it's more helpful.
Okay, and it is being used for both right now.
Right.
Terry, I got a question on revenues also. The budget is $56 million, and the first quarter is 11. So that would, you know, if you multiplied that by 4, you'd be about 45, 46. Where's the 10 million? Is that, and what's that plan for?
The 10 million, do you mean 11.6
yeah, because if
or 11.4?
Yeah, 56 divided by 4 would not be 11.
I'll go into,
so why? What's the rationale?
I'll go into a little detail of how we do it. We're kind of sophisticated. We actually do trending averages over the last 3 or 4 years, and we break down all the revenue by type, by category, and by account. And so we begin to see property tax is a great example. We usually get that in the 4th month. And so that will be typically lower in this first quarter analysis because we don't get the revenue until the first month of the second quarter. So it's going to bring that average down. We're trying to get as close as possible to what we expect to receive in revenue. Does that kind of make sense?
Yeah,
so it's not just straight out divided by 4. It's based on historical collections and when we're going to see that revenue source
Terry, as a follow-up to that, is there, I know property tax is one of those categories that comes in, what, November and April, basically?
Yeah,
And that's why
for
it
the most
skews
part.
this quarterly budget, but are there any other categories, main categories, other than that? Is the revenue sharing pretty much monthly, or do they spike in any particular months?
No, the revenue share are not all monthly. They're not.
Okay.
And then the other major one that we really keep an eye on are the sales tax that are collected from Christmas sales, and then some stronger things, at Thanksgiving and stuff like that. And again, the forecasting methods that we use take that into account. And that helps us keep a better eye on where we're at year to date.
No, I'm just recalling, like I say, as a former budgetman, I know there's some of them, which this gives you a little better feel, because it's not 1/4 of the entire gross amount, because some of it, like property taxes, comes in November and April. So if you did 1/4, then it would skew. So, and then just like Christmas sales tax is going to be higher on average than, in January be down and et cetera. So that's why I think it's helpful if you break out the operating versus construction, because I really like to get a feel, at least in the first quarter, from a operating standpoint, are we ahead or down? And then capital, where are we ahead or down?
Okay. And then I was going to say, kind of leading into that, if no one has any more questions.
I do.
Here.
Now, is your presentation, first of all, going to be more or less going by page from this book, or have you condensed it? I have questions that are kind of by page, so I'm gonna try to keep up with how you're presenting. But actually, off of Joe's comments, I know just in my own retail that Christmas sales can be that quarter, or even that month, can be 20 to 25% of the whole year. For the city's retail sales, do you see that type of percentage within your own figures, or would you say it's more like in 18% of the year, would you say, for retail sales tax?
It is much higher, and I don't have the percentage. I can get that for you. The other thing that's of interest here to notice is when we sell things, or people sell things in December, they report in January, we collect in February. So there's always a lag with the sales tax. And again, like I said, the methodology we use to forecast takes into account all of those historical averages, if you will.
One last question. On the contractual column of your table here, you have the budget, and then you have the amended budget of $12 million to $13 million. Was there something new that came into play? I mean, it's not a huge number, but it's still, I guess it's still $100 million, or I mean $100,000.
Right, and we'll talk about that a little more in detail when we talk about the budget amendments. Essentially, a lot of the contractual services that have switched around are between categories is what happened. You'll see that the total budget has not increased that much. The 255 budget that you appropriated when we adopted the budget has remained the same. The budget transfers move the appropriation between categories is what they'll do. Between categories, between funds, between departments. And like I said, I have some examples of that in more detail when we talk about the budget transfers.
Yes, I have one, too, if we may. On these urban shared revenue sharing and any of that sharing, tax sharing from the state, does that come in more than one time a year, or is that just a one-time shot?
They come in multiple times a year.
Comes in multiple?
Correct.
Okay.
And they have multiple sources. In fact, with that, if you don't mind, I think some of the questions are answered in this slide, and I can always go back. This slide represents the 6 top revenues, which make up 93% of the total revenues for general fund. And as you can see, property tax right now is at 121%. That's because we had one payment come in, and again, based on this trending average, we usually don't have any come in. Probably was a prior period adjustment where someone just sold their house and paid their taxes or something like that. It's not much, but it drives the percent up. Sales tax are what's remaining strong. It's not construction sales tax. And I can tell, construction sales tax is down from last year. It's 40% in first year's quarter, so you can see it's dramatically down.
And that's where it would help to break that out.
Yeah, and then urban revenue sharing, of course, That is always a 2-year lag, and so what we're seeing are the income tax from a year ago that were posted to the state that we're now receiving the revenue for. All indications are that that number is, I guess the good news is that it's not declining, and the dips we're seeing we're going to see this year and next year, but they're already collecting for the following year, and they're seeing increases. And again, whether it was from prior period adjustments or earnings are just up, it's one of the one of the revenue sharing from the state that we're actually seeing flat or increase. Auto lieu is up 4%. We just keep an eye on that. We don't expect that to come in over budget by year end. State shared sales tax, it's coming in a little slow. Indications are that that is not strong and is not going to increase. And development related revenues are again down for probably the second year in a row at 79%. And that would be building permits, engineering fees. It crosses 2 departments. It's from both community development and engineering. So are there any questions on the revenues?
On the revenues, I was going on to, okay, the 3 there, the urban revenue, the auto lieu, and the state shared. If, in fact, the state goes and tries or does successfully sweep those funds, and according to the budget, it looks like $2.3 million. First of all, which ones could they actually sweep of those 3?
You know, I'll just tell you what we've heard at the last conference we went to, which a gent from the JLBC, which is the state budgeting office, spoke to. And the philosophy down at the state is that when we were all making money and doing well, when development was high, they still shared all the revenues with us. So there's a percent, and it's based on, some are based on population. It just depends on which one it is, and or origin of sale, but there's a formula that goes for each of them. Their thought is that they're not going to take those now that we're doing not as well. So the one that they've talked about, and Larry probably has better information just because he's been around longer, but HERF is the one, and we have seen that. They swept both the LTAF funds and the LTAF 1 and 2 funds this year. They're not slated to come back at all.
But that's not these.
No, it's not.
So those will probably be all right.
Yeah, and like I said, that was the assistant director from the state budget, and he just felt that the word down there was, they had not messed with the formula when we were doing good. Why would they do it when we're hurting as well?
Are you coming up on water resources and wastewater revenues?
It's in the other funds.
Well, I'm curious as to, let's say, it's down about $800,000, and so I was wondering where the offset is for that, or if this is still calculated into the upcoming months. But
yeah, and
here.
I'll just go quick on them, and if I can answer a question when we get further along. Both the enterprises funds, as noted, are down in revenue. The rate increases come in are effective January. So at that point in January, we should see year-to-date, again, trending analysis that those should be stronger. The couple things that are going on in water and wastewater, we had a very wet winter, so we're hoping this winter will be dry because it does impact both the sewer and the water because the sewer fee is calculated for the 3-month average during the winter. So if it rains, people use less water, and then the sewer rates go down too.
I have a question for you on the revenues above there. When we look at the plan inspection fee, that's 79%. Some of those, are those going to catch up? Because you said you've talked a lot about trending, and when you look at a lot of them, it looks like if sales tax wasn't at the 107%, we'd have quite a bit of a deficit. Do you expect those with your trending to catch up, or those other categories?
We hope they catch up. According to building permits now, we closely monitor the new housing starts. We also work closely with planning and development to see what's kind of, coming in through planning. No major revenue is expected in that area.
Because a couple of them, it looks like it's about, if we took out the sales tax out of those revenues, I guess I kind of look at a lot of negatives, and I didn't know how your trend line was rolling in the first quarter.
And it's always a question. We, again, went to this roundtable conference with a bunch of folks from the state and finance directors and budget analysts and stuff. And we were all talking, and that's the question, is have we hit bottom or are we continuing to go down? We have been very conservative in our budgets as far as development-related revenue. Construction sales tax, we're at $3 million. So the question is how low can we go? So we're hopeful that that's going to turn around. There's just not significant activity, I guess you could say, on the books that's going to warrant that.
I guess at what point do we have to make some sort of budget adjustment if it doesn't? I mean, do we have any cushion or?
We will monitor these through all the quarters. The one we do this every year is right after Christmas when those sales come in. We'll see that's the biggest impact we're going to have and how that kind of fares out.
Okay. So we get
Every
a bump
year,
from that to
we're
cover the
always
other-
waiting, right?
Okay.
Do you have any idea of how foreclosures have affected the water and wastewater revenue?
We know that consumption is down, and this is probably maybe a better question for the Water Resources Director, but working in tandem with Marty that does the billing, what we're seeing is that, yes, we do have a number of foreclosures, which would be intermittent, if you will, stoppage of use. But then, people get back in the houses and they start using again. I think more significant, and I can't tell you which one is having the higher impact, but I think what we're seeing as far as the decrease in consumption comes from the high water users. And when we did the rates and you adopted them, it was set for that type structure so that it encouraged water conservation. So the thought is that the higher water users are really feeling the impact, such as HOAs and the parks and some large greenbelt spacing, and they're cutting down on consumption.
Good, thank you.
And we're really going into next year to do the forecasting. It's one of the things we're going to look at to see, is it residential use that's that far down, or is it these high consumers that are just doing the conservation, which is what the rate was intended to do.
That's a good idea.
And it should cut costs. That was the other thing. If we're, the higher usage is quite expensive, and if we're not using it, then the water cost should go down too on the other side.
Right. Again, thank you.
Terry, the one thing, as a result of 301 and 302 going down, there's about $500 million. The state's got to figure out how to balance the rest of the year, and I was kind of disappointed to read, I think Pierce the other day said they're not going to deal with it until January, which will probably put them about $800 billion in the hole. So I assume at some point, and it's probably not going to be till January, you'll have a better feel of where they're going with this. My biggest concern is, since they've sold their buildings and they've pretty much tapped all their rainy day fund, and borrowed to their top on any funds they could borrow against, there's not a whole lot of places left for them to go. So I'm concerned that we may be the next target on their list. So would appreciate if you hear of anything going on down there, and I suspect it won't be till January, because that's my understanding when the new president of the Senate's going to address this issue. I personally wish they'd addressed it earlier, but I'm sure that's probably when we're going to start to hear about how they're going to balance this budget of theirs. To let us know because that's my biggest concern, is where they're going to get their money to balance. Yeah.
And that, and that was a shared thought at that conference. The other thing is that the assistant director from the state, at this point was pre-election, and so someone brought up that question, and he said, well, we have Plan A and we have Plan B, and so he talked about Plan A, which is if the incentives went through, and they didn't. So then we asked about Plan B. He goes, I don't know. So they're not ready. They were kind of in the wait-and-see mode. I think you just kind of have to be optimistic that all the cities are cutting, and there's not too many cities that are balancing the budget, and so to further, make that deficit by cutting the state's funding to the cities, it's just exacerbating it. I don't know.
Well, I agree, but I wouldn't necessarily agree that they won't look at that. So
Keep your fingers crossed. Okay, any other questions on the major revenues? Again, this is general fund expenditures by category. Just wanted to point out here that the salaries are the bulk of the pie here. They represent almost 75% of the general fund money that we expend. Year to date, it's at 21%. I think we're at 6 out of 26 pay periods. So that percent will gradually grow as we get to the end of the year, just because of the timing of the payroll. I forgot. I think we have 7 vacancies right now. I think the thing to note here is that we're not experiencing the vacancies that we had before. We implemented budget cuts during the last 3-4 years. We've also frozen a number of positions. We're kind of down to bare bones now, where we're not seeing a lot of turnover or savings due to the positions being on hold or frozen. Contractual services, that runs a little low during the beginning of the year, and kind of back to that run rate concept, if you will. Some of this is just because it takes time to get the contracts going, or we lag in payments, but we do expect to fully spend that out by the year end. And the same thing with the commodities. Right now, it's at 20%. We do we recognize seasonal expenditures a lot in the July and August because of the heat, and then some of the operations are just a little more costly. The other thing I'd like to point out is, although it's only 3% of the budget, we've trimmed this down to nothing. I think it's like $1.3 million. So again, if we can get by without going over on any of this, we're probably not expecting any savings out of this category either. Any questions on general fund expenditures?
Yeah, just one question I have on the contractual expenditures. Does that include our utilities contracts? It's all contracts throughout the
It's
city?
purchased services, correct. So it would be if we had refuse collection, or you
Yeah.
have water, telephone.
Or special contracts with at Public Works?
There's some high ones are janitorial services are in there. When we have outside vendors come in and fix a maintenance that we can't do internally.
Or some work? Well, let me give you an example. They're working on something down at the river right now, putting that effluent pipe in from the, I guess that's coming from the effluent. That is the effluent going into the river, I suppose.
Out at the water reclamation plant?
Yeah.
Yes, that's in capital.
Okay, that's capital. That isn't, so that wouldn't be contract services?
No.
Okay. How do you define the difference between contract services and capital?
Anything that capital has a useful life of longer than, I want to say, five or 10 years, and a dollar amount greater than $50,000.
Okay,
So
if
contractual
we-
services would be like legal services, or if we pay a consultant to come in and do a study, or we have
Okay.
water, wastewater folks that come in and do specialized GIS or systems analysis or something like that we wouldn't do. We wouldn't have staff in-house do that.
So if we had hired individuals, additional individuals to come in and work on that, on something that we're doing under contract, would that come under contractual services, or would that come under capital?
If they're working for the city in operations, it's listed in the operating budget.
Okay.
And then we have, a lot of maintenance agreements are a high cost within the general fund budget. So we're paying, someone to maintain an IT system or something of that nature that's annual system agreement.
I understand. Okay. Thank you.
Okay.
Terry, what department or what line area is the revenue from the new partnership with Litchfield Park for fire? What is that under?
It is in its own code, and it's in general fund.
So it's just going into general fund, you don't see it separate?
All the revenues accounting-wise go into general fund. And we, with the exception of the contracting sales tax, when we do analysis and we are doing forecasting to you, everything else goes to operations.
Okay. And I know on page 8, you're kind of going into expenditures, but there was an increase in fleet, and it says it was unplanned spending. Was that large? What was the, there's not a lot of detail to that.
Then it actually hasn't occurred, but we're keeping an eye on that because we know we have some really heavy users, namely fire and police. And what has happened is every year the fleet budget is charged back to all the departments. At year end, whatever they don't recover through their rates, whether it's buying a part and maybe we build out less amount than the part costs, and then less amount than it costs to put in. Anyways, we've been doing I guess it would be a journal entry, technical term, to just take the money and spread it allocate it between all the departments based on use. So if you're, a 53% user, you're going to get 53% of the budget to fund fleet at the end, the difference of what we did collect in cash and what they spent. Does that make sense, or is it confusing? So if their budget for fleet was $800,000 and we only collected $7 million, we would take the $100,000 at year end, after we close the year end and everything was paid for, we find out what the difference is, and then we allocate it back to the departments. So we worked together with Fleet, and we did an analysis of how much we would need to increase 3 different components of their spending, which is labor, overhead, parts, and then also fuel. And we are going to, I don't think they've implemented it yet, but they're going to increase the rates just so that that will balance out at the end of the year. So we
And
don't
this
have to
is
keep
back-
doing the cash transfer.
And this is back to vehicles.
It's vehicle maintenance.
Yeah.
Gas and oil and tires, right. But we've been doing this every year. It's the same. It's just kind of, I guess it comes upon us at the end of the year. And so this way it's just easier to plan and forecast and do a better job of telling the departments what they cost or what it costs to run the fleet. But we did have to increase those variables within the fleet budget to do that.
Okay.
And then pass back the charges to the departments.
Just, Terry, real quick, on the water resources, that $593,000 shortfall, is that in operations, or is that the water resource impact fee? Is
No,
that
it's
the
operations.
That's operations.
Right.
And if I heard you correctly, that will hopefully level off when the rates take in effect in January, or you're not sure?
The rate impact, or the rate increase is in January, right, and so we're hopeful that it'll be stronger in the second half of the year, the revenue.
But you'll have a better idea, hopefully by January, whether this is going to cover or not cover.
Right, and we're doing that analysis with the department right now, again, to determine, what was the impact of residential use versus high water users versus the wet winter.
Okay.
Terry, on your personnel chart you had before, how many people, bodies, do we have on board today in the city of Goodyear?
How many bodies do we have on?
Not authorized, but actual.
Kay, do we have 500?
497 are on board right now.
Or did we lose 3 in the last day? No. Kay and I just talked about this, 497.
Okay, and how many did we have in January of '09?
I'd say 497 probably, or maybe 3 more. Kate, do you have any
No, that's a year ago.
a year ago?
That's over a year ago.
A year and a half ago.
A year and a half ago.
Okay. It hasn't changed that much, but we'll have to provide that to you, Mr. Mayor.
Okay, so that's full-time, and January '09 is when we started our drawdown, really. It's, that's when we started to cut our costs around here in preparation for the budget of
Well, the initial
9-10.
the initial layoffs were in '08.
Is it a wait?
How many people did we lay off in '08?
27.
Yeah, that was when the real
That's
expenses
when we really
being
started the
cut.
drawdown. Yeah.
That wasn't '09?
No.
That's 3.5 years ago then? 2.5 years ago.
About 2.5 years ago.
Well, what was it?
Kay, you,
October?
I think it was.
Let's say 2.5 years, that's a long
Because it was was it October-ish?
No, it was.
when
No, it was in May.
Was it?
It was,
Oh, my gosh. Time is
it
just.
was right after the election.
Sorry, it was April '09.
Yeah, it was right after the election.
So you're right. So it's been, like you said, a year.
2 years. It'd be 2 years in January that I'm asking for.
If I
But the reduction of 27, which was primarily community development, as I recall, was in this winter or spring of '09.
My birthday, April 21st of '09.
Oh, happy birthday to you. Yeah.
Oh, God.
what was
Now we'll all know, huh?
We started
Now we
talking about
know.
it in the real issue started in October of '08 when we started going into the budget issues. So.
How many people did we have on staff before we did the layoffs and with the open positions? I mean, what was our total staff at? I mean, I don't know the numbers.
It was close to 592.
Before all the
No, that
reduction.
was authorized positions.
yeah.
I want that, I just don't know what the total, to get a frame of reference.
Yeah, authorized positions was a high 500s.
592.
Thank you.
But the manpower, the actual bodies on board, was something less.
We started way before the layoffs of not filling positions, so we can certainly
Kay, if you're going to talk, could you come up to the microphone, please, so for broadcasting purposes?
You want to tell us your birthday again?
I don't want anybody to forget now. And the terrible thing is I had to pause on that. But prior to the layoffs, we started, when positions would open up, there was a hard look at every position that opened to see if it had to be filled. And so you're absolutely correct that there were not that many positions. But we went from 592 down to now 507. So we only lost 27 full-time people, but all of those positions.
Right,
And we'll get you that number tomorrow.
of bodies.
Of bodies, full-time employees on staff as of January 1st?
Of 09.
31st of 09. You want the beginning of the month or the end?
Mostly those.
Whichever comes easier
Oh,
accounting-wise.
You got the
Yeah.
year right.
Thank you.
Real quick, I don't know if Kay has the answer, you have the answers. How many people have we lost so far this fiscal year, since July?
I do not have any.
That's Kay.
I'm sorry, Joe, I wish I knew that right off the top of my head. I don't. Our turnover rate has decreased, and we can give you that tomorrow, too. Vicki keeps up with it monthly.
Are you talking cumulative additions and subtractions?
Yeah, what I'm trying to get a feel for is, I know, when I used to have the position Terry had many years ago, we were, right before I left was the good times. I left right at the time when it started going south, and I think it was in the upper 500 somewhere. But I know there's been some increases, decreases, but I'm just kind of curious over time. I know it's been dropping down, and I believe our employee per thousands is probably the lowest it's been right now in about 15 years. So I just be curious to see how, not only what people are leaving and why they are leaving, at this point. Just curious.
I think the other thing from looking in the budget schedule that's noteworthy here is right in the middle of doing the freezing of positions and the layoff, we also added the ball stadium, and that was 20 employees. So although you went down, you went up when the stadium started.
Oh, that's
So
right.
it's a little bit deceiving if you just look in the budget schedules.
That's right.
Yeah, regarding Joe's comment, the economy is so bad that people aren't leaving unless they have something better out there. So if they're disgruntled, they still have to take care of their family, and they're going to hang around, I think. So I don't know of anybody that is disgruntled, but it's a time where you have to have a job, and you don't walk away from it.
In Arizona, that's just.
Well, certainly here, yeah.
Terry, since we have people is the topic right now, on page 7 in the discussion under salaries, it's stated that the first year of the new health care package is costing more than originally budgeted. And I wanted to know, what was that impact? I mean, was that a large dollar amount, or what's the impact here?
No, we actually had a meeting on this today, and we're talking because there's two, maybe there's more, maybe there's three. There was a cafeteria package plan where you could pick which plan you wanted, and we have to pay up front. The city has to put in money into an account, a health savings account, if you will, and as the city employees use that, the money comes out. So the payment up front isn't annualized. So how you would normally pay, let's just say for everyone, it costs $400 a month. So you're paying $400 once every month for 12 months. This isn't working that way. We've had to front load it, if you will. So it's making the cost higher. We don't know, because of the type of insurance that we have is based on, some of the plans are based on claims. So if nobody went and didn't make a claim, those costs may not even exceed the amount we've paid, which I'm sure we probably get a refund. Dean knows this better than me, but we have to pay up front and then keep a balance in this account as, any of the people that are participating go in and use the services.
So pay me now, pay me later.
Right, and it's just heavier in the beginning of the year.
Gotcha.
And another thing in doing this, we're going to have to make a budget correction. In fact, I'll point out a note that we have here. Right now, if you look at by department, HR was actually a little bit high. Part of it was because of that. The other reason is the charge for the premium was being charged to the HR budget, and upon discussing and figuring that out, it was actually budgeted by person. So we're going to charge that back to the individual, not to their paychecks, but to the department where the employees are. So instead of having one large expense in the HR budget, it'll be how many ever people are within that division, they'll each get that charge for the person. And we just, after a couple months, realized that when we were looking at the accounting records, it didn't seem right. Why was Dean's budget way over? But we knew we had added that health care in there.
So that's departmentalized by
Yes,
department?
yes.
Oh,
But the
okay.
cost was being charged in one place.
Right, I understand.
So that will, like I said, once we make that change, it'll bring HR down to about 21%. And the only other budget that was over, that again, I probably should have pointed out on the prior page, is the city manager. And that was mainly due, we pay a lot of other people up front so that they can do their jobs, such as the League of Cities, Southwest Chamber, participation in Luke, and just some of the things where their operating budgets depend on us to fund them, so we pay them at the beginning of the year. Things we looked at as we were going through, again, we had quarterly meetings with almost all of the departments. We're going to continue to monitor the revenues, a lot of for the same questions that you've asked tonight. What's driving costs? Have we really hit bottom? Are we seeing stability in the sales tax? And then, make adjustments as necessary. We always keep a moving projection, if you will, for the next budget year and the 5 years out. And so as we need to react to things, if we get news from the state, we'll adjust our year-end estimates, and then we'll also adjust the projections for the next 5 years. We get I think we get the 3 or 4 revenue estimates from the state pretty late. I think it comes out in February or March. So we really won't adjust any of the state shared revenue numbers until we get that or we hear something's changed at legislation. As far as the expenditures goes, we're right on budget. We're doing good. I think the message is for everyone to live within their means. We don't expect anyone to go way over budget. And then continue with the quarterly analysis. What we're looking for is what I'll call rotation of the crops. So if a department didn't spend some money in an area because they had some efficiencies or savings, but then maybe their electric went up or their chemical costs went up, we'll kind of encourage them to move the money around rather than put additional appropriation, but just let's spend what you have now based on your business today. And in doing that, we'll be realigning the base budgets when we put them out there, probably in January for the departments, and we'll really look at how much they've spent in the past and what is anything driving a change where you would need to, dramatically adjust your budget one way or the other. Normally, we can see from base to base, we can live within the means other than the very large increases such as health insurance or some electrical costs, new programs, something like that. And then we want to look to identify efficiencies, again, where probably we have savings in budgets, and we can use that money somewhere else where people are going over. So all in all, a good thing. Did you have a question on did I answer the question on the water and wastewater revenues?
Well, you
Was
said
that good
that
enough?
when the rates increase in January, that would make up for.
We're hoping we're going to, right, keep an eye on that and do some further analysis. There is an extra shot in the arm from HERF. We got an extra payment. I think it was from, I want to say the bus shelter advertisement. And then water and wastewater running a little low, and sanitation is doing great at 117%.
So were you saying that HERF money that you have there is not really a trending upwards by 25%, but you had an extra payment in there, so it kind of skews it a little bit
Right, for the year, I think we're going to be on.
right on? At 100?
Right. And I don't think that, I'm just not sure the timing of that payment every year. If it comes in, sometimes if it comes in the 4th month, it wouldn't be trended in there. And again, we're not expecting any LTAF money. And then on the expenditure side, all the departments are right there at budget. You would expect at a quarter year to be right around 25%, so they're running good. Again, with these budgets, I'll point out the highest cost is personnel, and that is at 6 of 26 payrolls, which could appear artificially low, and as we move through the year, that number will probably go up.
I expect on the ballpark you'll have a better feel after spring training because
Yeah.
it's too early to kind of get some estimates right now.
Right now, you could say, that we actually broke their department out into 2 divisions this year, And the operations side of things, where they just are out there every day doing their thing, was running at about a quarter. It's the other part that drives spring training that had minimal expenditures.
Okay.
Because we've changed we've purchased the lights, our street lights, that will level off later, won't it? There'll be a savings in the end?
Yes,
On our
electrical
on our
costs are
electric
anticipated to cover the cost of the capital investment.
So that will begin to come down.
Yeah, I think what you can probably realistically anticipate is not so much that the cost is going to drastically reduce, is that as we build, you won't see that increase like
Oh,
we've had to pattern
right.
it up in the last few years.
Okay.
I mean, it's probably went from, 700,000-800,000 one year to 1,300,000 over the course of the last 3-4 years.
As we begin to develop new areas.
Once you see that growth again, right?
That may not be for 3 years.
Are you about to go into transfers? Is that what your next?
But I can answer the questions if you have
Well,
a
no,
page.
I had
or-
a few, I just had a couple of questions that were in the beginning part of this.
Okay.
Do you remember what the actual amount was budgeted for the year for use tax?
No, but I can look it up. Last year the estimate was 200,000. Unfortunately for this year, it's two different line items, so I can't break it out. I don't have the detail on it.
Get back with me on
I
that.
can see what
Okay.
makes the two numbers up, right? Probably right around 200,000.
Alrighty. You did just mention spring training. Why are we not putting public safety overtime within that area? When they are actually overtime for spring training, why is it not shown there?
I guess there's a couple different schools of thought or approaches on this. When we track all the expenditures and we put them forward in the CAFR, and please correct me if I'm wrong here because I'm not the accountant, those costs are categorized as public safety costs. And so it keeps it within the category of the actual expense. Although they're doing public safety and it's out at our stadium, one could argue it's a cost of running the stadium.
Well, and that's an
But again,
enterprise.
Right, and again, as far as the funding source goes, the two are with the same dollar. We do the general fund
Okay, yeah,
transfer
I
there,
gotcha.
and so it really doesn't get us, financially, it doesn't get us anywhere to do that. I really think that the decision is made just because of the way we categorize the cost. When we do the comprehensive annual report, then it shows up under public safety. That's your cost of doing business to provide public safety.
Well, but the cost of doing business at the ballpark then isn't accurate because you're not seeing the full amount that was spent there. And part of that was overtime with fire and police. So I still question that thought. On page 6, you have in the investment earnings line shows a large increase. Can I be excited that maybe we'll see this every quarter? Or why did that happen? I think it was page 6.
It's 14,000 for the quarter.
I mean,
Maybe look
it was, you had actual of 37, wait a minute, did I go backwards? It went the other way. Oh, that sucks.
I wasn't going to say that. I just
Oh,
kind of
no,
went,
that's
it's
okay.
14,000.
Oh, man, now I really
want to see that every quarter.
No, we don't want to see that. Ah, darn, come
As
on.
someone explained it, just put another O after the
Yeah,
point,
right,
point
right.
001.
Oh, well, how come that happened then?
Just
Who
the
made
market.
it? It's a bad deal. You didn't go out and buy gold. Okay. That takes care of that one.
I have a follow-up. Is that because of the stock market? I mean, is that basically the bonds and the market conditions just that kind of went down this summer? Is that what it's tied to pretty much? So next, since the market's gone back up as a high overall, are we going to see?
Terry, that's not really we aren't invested in the stock market, so this is purely that the banks are only paying 0.01%.
So this is the interest rate, and so since that's 0%, we're not going to see.
That's correct.
Because we're low risk.
So,
We aren't going to reap benefits if the stock market goes up.
so we still, until interest rates go up, we see what she says every month.
Yes.
Sorry.
Well, no, this says actual, and then it says July to September actuals. So that's why I thought it was better. Now I don't understand the difference. See, I mean, it says actual,
Yeah.
and then it says July to September actuals. So that's why I thought it was a great increase.
No, we're down year to year.
Okay. I don't know if I'm jumping ahead, but you had on page 10, under police, we had a substantial expenditure of overtime in the police department of $430,000 for 1 quarter. Is that typical?
No, that's one of the major expenses in their department.
So that's already budgeted, that's a normal.
Right.
Okay, so if that's normal,
No, it's not for the quarter. That just is something that I was trying to give you a sense
Oh.
of what makes up their budget, some of the larger line items that
Okay,
we
so it's not
monitor.
just a quarter.
No, in fact, we had their quarterly meeting today, and they were under in overtime and are expected to come in under for the year.
okay.
Right.
Okay, great.
And that's the
'Cause I
same
was-
thing.
Yeah. that's-
Those two expenditures are probably the largest single line items besides salaries in their budget, and that's what we closely monitor with them.
And then I guess she'll be going to, okay, CIP's next. All right, I'm done. Thank you.
Well, under that, Joanne mentioned the transfers that are part of our consent in the next meeting.
Right.
Right? And you asked, we can talk about them now. I know, I suspect everybody was going to pull that item to discuss it. If we can discuss it now, that would be better, but I'm not sure where it fits into this briefing.
Well, what we, on the quarterly report, do you want to just give me a minute to kind of walk through and explain maybe what I was thinking on the slide, and then you can, I guess, decide?
Well, since it's in, I assume it's part of the work session that's in this package.
And we had a,
So if it is, then we can discuss it now.
right, and
If it isn't, then we got to wait till the meeting.
no, and why it ties to this report is because we list the original budget in the report and amended report, or amended budget, so that you can see year to date as we go along where we're coming in at. It's more accurate than just having the original budget all the time and then never showing the amended budget against
No, I
the
understand the
expenditures.
purpose of your presentation, I think.
Okay,
but
so that's why we brought it in.
I just
the
want
quarterly.
to, I guess let me ask my question again. When do you want us to talk about these transfers?
I
You
think
want
we
us to
can
wait
do
till
it.
the meeting?
No, I think we can do it now.
Okay.
I'm
So
prepared to answer them now.
Whenever you want that in your presentation, we'll get to that, okay? But you run your presentation, and when we get to this, we'll do it.
Okay. Any questions on expenditures
Just
or
real
revenues?
quick, out of that 430,000 overtime for the police department, how much is related to the stadium? How much of that is the stadium typically?
I don't know, I want to say 30.
Ballpark?
You know, Mark, 30?
Probably about 70,000.
Okay.
Live.
Yeah, I think it's worth noting when we
Wow.
go through our budget presentation. I'm kind of with Councilmember Osborne. I'd like to get the real costs of what it costs us to operate the stadium. And I realize the accounting issues as an accounting professor, but I kind of like to get the true cost. And I realize it's moving it from one general fund to another general fund. But from my perspective, it's important to get a total picture of what it's costing us at the stadium, or the
Okay.
ballpark, excuse
Okay.
me.
Do you have anything to say about that, or no? Okay, so on the quarterly report, again, you'll notice that we presented the format with the budget and the adjusted budget, so you would get kind of a real-time picture of where we're trending for the year. So with that, what we used to do with budget adjustments is that by state law, we have to take all the budget adjustments that fall between these criteria, between funds or between departments or capital improvement, larger expenditure in nature. Again, according to state law, we have to bring those back to the council. What we've done historically here at Goodyear is when we're doing tentative adoption of the next year's budget, So this spring, we brought to you the 11 budget. When we're doing that, there are state forms that we fill out, and we list these transfers in these forms. And what it says is, what was the budget? We'll just use this year as an example for 10, and then what was the adjusted budget at year end, and then what is the planned budget for 11. And so we did it, if you will, kind of after the fact and in lump sum. So we wanted to be proactive and kind of following the suit of transparency in government, and we wanted to bring the quarterly adjustments to you. Again, I think we're going to do this presentation quarterly with this report and bring these for you so that you could look at the ones between funds, between departments, and ones that were related to capital and nature. And that will be the list that you have. So let me give you a couple examples of the ones that are required, that administratively we have to do to keep the books balanced, if you will. So far this year, between funds, there are a number of items that as we publish the budget or we go and we put it in the system, we have some cleanup items. There's always things that just have changed between the time we actually have the public meetings, and most of that is just account coding. So that, again, isn't by law something we have to bring back to you, but I just wanted you to note that because it's probably the majority of our transfers. Should have been code 6,000, and it really was code 8,000, again, accounting stuff. Between funds, something that's happening this year that we have to do transfers of, and that's, I think I explained it when you saw the adjusted budget. We have centralized the maintenance of the software agreements in IT, but found through budget discussions and communications with the departments that it wasn't always consistent. So some departments were paying for their IT maintenance in their budget. Some weren't at all, and we weren't updating them. And just a whole gamut of things were going on that weren't consistent. So we have moved the appropriation for all of the software maintenance budgets. So between funds, for your enterprise funds, between HERF and water and wastewater sanitation, if they were paying for maintenance agreements for IT software systems, that funding appropriation now came over and is being paid for, and the bills are being processed through IT. So that's kind of one of the clear examples of how we had to move appropriation between funds. Another one that's both an example of between funds and also between departments. We were in negotiation with Litchfield Park to do that fire services agreement. In that agreement, it was there were some things on the expenditure side, on the service side, that we needed to provide, and we didn't do that in the budget process, and so we had to add, I want to say it's a part-time building inspector, and then some of the equipment and truck to go with that person. That's all revenue-based or revenue-backed, and so we did have to add appropriation both in the fire department and then in fleet to buy the truck.
That's 27,017.
Yes, it sounds about, yep, right.
So you're creating a line item for backup and proof when you bill Litchfield Park for those particular
They run
services?
that through AR, yeah.
Okay, good.
And I think, Joe, that they got the bulk of that money up front, a lot of, because of the capital cost of the truck and whatever. I think we got a lot of it up front, so it wasn't just 112.
Okay.
And so then another example of something between departments, we had some building permits, and then it was decided that it might be more effective if we split the building permit. I think it's the support staff. So they were budgeted in engineering, and then we moved them to community development. So we had to move, when the people move, we have to move the appropriation to pay their salaries. So that was something that's all within the general fund. It kept the budget the same, but it had to go from department to department. Another example of this is another one that comes up all the time, but if we get new grants, we actually set appropriation in a division called proposed grants, and then if we get the revenue or Chris is successful in getting a grant, then we will set up the grant within its own funded division so that we can track that money separately. So as those things happen, again, we have to do budget transfers to get the appropriation so that we can have the expenditure appropriation for those grant items. Another one on the capital side is the major one there, and it's pretty intuitive, is every year about in March or April, Ken will actually estimate how much of the capital projects, all 80 of them, how much is going to carry over to the next year, because we don't do a whole project in 1 year. So he has to make his best estimate at that point in time of what the project's going to spend through the next year, and then how much of the balance is going to be in July 1 of the following year. When all is said and done and we reconcile that after all the bills are paid, we adjust, probably 60 to 70% of the projects to a different amount. So the projects are only allowed to carry over the funding that was available. So if we estimated they were going to spend $200,000 and we carried over $5, but they really spent the whole $5, then we'll back that budget down.
Question, now maybe you just stated this, but for example, on the Cotton Lane Bridge deferred payment, it shows that it was $750,000, but we spent $686,000, and it shows complete. So if there's extra funds, where does that go?
It will go back, and we do a really good analysis of that. It's something that we've done as times have been tight. We've really taken a better look at that. I think we do a great job. We'll put that back in the funding source. We won't leave it in the project to kind of maneuver around or be changed for another project. We revert it back to the fund.
Do you do that at the end of the year, or do you do that right then? How does that work?
Well, we will do it during the middle of the year if we know the project is done. And the thing with the projects is as they end, the payments are slower, and you just don't, even though the road is built, the payments may come in for 3 or 4 months after, or the request for payments, I should say. So we do a real thorough cleanup. Ken talks to all the project managers again in that March, April timeframe, and they really hone in on where are the projects, what's the status, do you have the last invoice, do you have the project completion paperwork, and that's where he gets better numbers on that.
Gotcha. Can you explain to me, I don't think I've ever seen this column before, encumbrances? I don't know what, this doesn't relate to me, so what is that?
The encumbrances, I think the easiest way to explain this is when you issue a PO. So we're going to do landscape services for Parks and Recreation every month. We're going to hire, Joe's Landscaping, and they're going to come out and they're going to do it for 12 months. We'll issue a PO for the whole 12 months. So it's going to commit that money to that vendor and essentially make it non-available for the other expenditures. And then as you pay the bill against that PO, the encumbrance goes down and the expense goes up. So at any given time, your expense plus your encumbrance will equal your commitment.
Well, see, and that's why I didn't get it, because it wasn't looking like that equaled. I'm just first one, public art. I mean, it says 79,000. It says actual 15,000, and shows encumbrances 34,000, and they, that didn't equal 79,000. So that's why I was at a loss as to how this was working.
Is that the CIP report?
Yes.
Okay.
It's my understanding it's designed to make sure they don't spend the money twice. So once it's committed, it's frozen. So they can't overrun their budget, and at the same time, they can't spend it twice. So if you got a contract that's committed for $100,000, the encumbrance is $100,000, whether they spend $100,000 or not, and then eventually it all rolls out.
Ken,
So,
do you have encumbrance?
That means it's coming in under budget?
Not necessarily. Whenever you get a purchase order, whatever that is it freezes that money so you can't spend it twice. That's what an encumbrance is. It means that money's owed
Committed.
and legally obligated, but you just haven't spent it yet.
And on this particular report, let me just point out what you're looking at, that column for 79,000, so if we were going to take both into account, you would say the 79,000 budget plus the carryover of 181 is available funding, and then deduct the actual, which are expenditures that have hit, plus deduct the encumbrance, which are expenditures, future expenditures that are going to hit. And so on a lot of the reports that in fact, Ken has another CIP report that, is that one of the ones listed in the monthly reports? Yeah, dashboard. And you'll see that balance. We provide it to the project managers. And so that gives the amount that's left for them to spend or commit to another part of the project. But I think the trick of the encumbrance is if you can think of a PO and you can just think of 2 lines on it, as you're paying down on one,
Well,
the
yeah,
other
that
amount
makes
goes
sense.
up. Yeah.
Okay.
And this just
It just
isn't.
didn't feel like the numbers were.
It's not. It's not intended to do, that calculation is not on this report.
Okay. Then I'm not crazy.
Would you like it on this report? Would you like available balance? We can do that.
Yeah, actually, that would be helpful for me anyway,
Okay.
at least to get an idea.
Yeah, no, I think that would be great. Okay, so with the examples of the budget adjustments, again, that are necessary and kind of administrative in nature that we need to do to keep the books balanced, do you have any questions, or can I further explain why we need to do those?
Just real quick.
Okay.
You had mentioned that once the project is done in the encumbrance and say there's extra money left over, to ensure that that money is not transferred to something else to be spent on, are you saying that you're taking that money and putting it back into the original fund so it can't be tapped for something else that wasn't originally intended?
Right.
Is that what I'm hearing?
And actually, we go one step further. We'll move it back into the original funding source. The only time that money may come back out is if you have a project overrun, and then that's going to come to you in the form of
Okay.
the contract amendment. Or if we have impact fees and they actually have cash to back them, then we could reappropriate that fund.
That comes to city council, right?
Those would when they do the contract, when they initiate the contract amendment or the contract.
If it goes back to the original funding source, is it noted in the transfer somehow? I mean, what would I notice to know that it went back to an original funding source?
You know, we probably have on their project closeout.
I'm sorry?
Balance of project, a return to fund balance or something like that. In the description, it would say
So
something
those
about
would be like
project.
the keywords to look for.
Project closeout.
Okay, Terry, let me ask you a couple of questions on these transfers, if I could. If you go to batch number 571, and for the council, it's much clearer in the council meeting preparation. It's easily read. You have $771,000. It says, developer reimbursement inadvertently left out of fiscal year 11 budget. I'd like to know why that happened. And then move to appropriate funded account. What is that?
Okay, on this one, this is actually Terry's fault because I tried to change stuff up and do it different. We pay out through the impact fees. We have development agreements where we pay back
I know
the
that.
impact fees. Okay, so that's what this is for. And we had historically had it as part of the capital plan. And I think we listed it as a capital project. It really doesn't belong there. So when we're doing presentations on the capital project and we bring forward to you by category or by type or by funding source what you're paying for projects, these payments are not necessarily the capital expenditures, they're reimbursements. So through oversight, again, this was mine because I tried to take it out of the capital plan, we now budget these within the fund to pay. We have the cash to pay them. What we didn't have is the appropriation, and you can see all the funds are different, so it's impact fees. I don't know if it's streets or general government. I'm sure one of them sewer and water. So this puts the appropriation in that fund to allow us to write the checks to pay back the reimbursements.
So it wasn't inadvertently left out of the budget. It was just that you accounted for it differently before. Is that
We
correct?
did, right, but in this year, I didn't put it in. Normally, it would have been part of the capital plan, but again, it didn't make sense. So this year, when we had the budget, this $700,000 was not in there. The cash is in there to pay it, but the appropriation to write the checks was not in there. So it didn't, the revenue was there. It was the expenditure line item part that was not in there.
And it was for a number of reimbursements, not just one.
Yeah, we pay monthly and quarterly.
No, I know that, but I mean, this was not a single developer
No.
reimbursement.
No.
Okay. And then,
The only one that I did, and you had to pick that one out, right?
well, let me keep going here. If I just have one more. Batch number 1520. $5,741,000.
Oh, that one's Ken's.
Pardon me?
I said that one's Ken's.
Ken Kennedy.
Oh, Ken here, or?
This is the one that I was just, this is the one I was just talking about with the capital budget. So what this is doing is essentially all the negatives you see here were where we had overestimated the amount of project funding or project appropriation that would be left at year end at June 30. So again, we have to make an educated guess somewhere in March or April.
I'll save you some time.
Okay.
Is this as similar as the $4 million of last year?
No.
It's a different issue. That's what I need to know. What's the difference?
What's the difference between the $4
we
million?
we had $4 million last summer. Actually, we were advised about it in the fall of a year ago, $4 million that was extra.
Well,
Okay, now this year, is this similar monies?
no, there's only 2 line items in here that are impacting the general fund. And it's about 120,000. So this is, all the funding for the projects that wasn't needed to bring over is now adjusted, it's reflected
Okay,
down.
so what happens, all right.
Okay?
Terry, what happens to the money, the $5 million? Where is that going?
Well, first of all.
And is that above and beyond what we expected to be able to use this fiscal year?
Well, but the key thing to remember here is that every number in that beginning number signifies a different fund. So the numbers have restrictions within them. So if it's in Fund 413, it has to be spent for that type of project. So to make kind of the blanket statement that this is money that's available somewhere else, no, this was budget appropriation for last year that wasn't needed for the projects because they may have spent the project. So some of them, the project might have been 100,000. We guess they were going to spend 50. In reality, they spent the whole 100. It's just to keep the budget clean for this year. It's an adjustment.
Okay.
It doesn't provide any extra money unless it's the case
I
where you
don't doubt you, I
have.
just need a sort of additional explanation.
Let me try, Mayor, on this. Capital projects that we do not end with our fiscal year. So as we're building the budget, we make an estimate in March. So for argument, let's say we just had a project that was $1 million project, and we're in March, and there's $1 million left on that project, and we, at that time, estimate where we're going to be as of June 30th. So we say it's going to be $700,000. The work comes along better on that project than we thought. We've only got $500,000 left on the contract. We would have to make an adjustment for $200,000. It's the same contract, same dollars, it's just which fiscal year it's hitting. That's what this $5 million is, just moving which fiscal year on the same projects. It's not changing availability of funds. Does that help?
If in fact the capital requirement, the funds consumed in that capital project during that fiscal year were less than that which was budgeted, okay? Would that excess be in this particular category? Would that excess?
No.
I don't think that would be shown in this category. Well, the closeouts which is a different process, but that would not, I guess, would it be shown if you were coming under? It could potentially, there could potentially be there, but it isn't that full amount.
Okay, but is any of this $5.7 million in that category that the actual funds consumed on a project were less than we budgeted? That's how I read this, okay? It says fiscal year 10 carryover adjustments to the fiscal year 11 budget. It sounded to me like money that was not consumed in the last fiscal year that's being carried over into this one. But you're saying it isn't. But that's what it says.
It's an adjustment because it could have been spent in April, May, or June. It's a combination.
But
And we could break them out by category if that helps.
Now that
It's both, though.
you're talking in specific terms. I'm talking in very generic terms. I'm not worried about this, whether it's water or general fund or whatever, for
So
this
some of them could
discussion.
have been projects that did not require the appropriation, and therefore it would roll back to fund balance. Others could be.
Well, can you tell me which ones that is and what the amount of the 5.7 million is available to us that we had not expected to have available? That's my point.
We can give you a schedule on that. That's done on a project basis. That's not done here where it's being done on a fund basis. We can provide that schedule for you of which ones.
I don't want a schedule. I just want to know the numbers, really. Is there money within water, or is there money within the general fund that we didn't expect to have? Okay, that's what I'm getting at.
Right.
And I don't need a schedule, I just need to know, is there, and what is it?
At this point in time, our estimates on the general fund come very close to what we had in the budget. So I would say in the general fund, no. On the other projects, now keep in mind, we did roll some projects over in the budget this year that did give money back, so that was built into the budget process. But there's an analysis of the closeout of those counts, and that Terry talked about. Not all of the accounts that make this total up have been completely closed out at this point in time.
No.
That's why I can't answer your question as directly as you're asking it.
Because it's not done.
Because the project, we may be getting bills in, so part of one of these lines that might show $100,000, there might be $30,000 that does roll back once we close out all the paperwork. And that's done on a project-by-project basis.
Well, I think that kind of goes back to my question that was showing for just the Cotton Lane Bridge. It was under what we had actually budgeted, and so my question was, where did those funds go? So really, I think, back to the mayor's point of, at the end of the day, or at the end of a quarter, could we see that, what money was saved and went back to what projects ended and money was saved that have gone back, to the general fund or whatever.
Right, and that probably could be something that's on the CIP report, because that's how we would track it.
Could we have it maybe a little-
Probably could and probably couldn't. Can you just give me a number within a few days?
Yeah.
Okay.
I think
I assume the whole council would like to see it. Is there any?
Yes.
Is there anything in there that is less than we budgeted for, and therefore is available to us in this fiscal year?
I think we understand the question, and I think that in the future, it might help to identify what some of these accounts are, because these numbers don't mean anything to us.
Now, they don't mean anything to me. I'm sure they do to you, but I just, I like talk general fund, water, enterprise. Those are the funds. And the CIP?
Well, out of the 5.7, the one that I can talk about now is the one for 1.3 million is the park and ride. And so what happened is that money was actually spent by year end. And so we had intended to need the appropriation in fiscal year 11, but it was paid for in 10. The bills just came in. So that money is not available. And that's, like I said, that's 1.3 million of it.
You mean if you budgeted for this fiscal year we're in, which you used past fiscal years to pay for that specific item, then why don't we have funds available that we budgeted for and don't need? Is that?
This is just a process to carry the funding, the appropriation over and straddle both years. We actually have it in both years until we do this adjustment. So this is to reconcile project to date and keep it in the appropriate year. It's not necessarily to say we didn't spend it and we're rolling it back. It's a budgeting technique to make sure that we have appropriation for the project in the current year if necessary, and then plan ahead if we don't spend that money to have it in the next year. We're bound by state law to set the maximum expenditure.
No, I got that.
So if we didn't do this to the magnitude of the 5.7, in some years we've carried over 50 million. If we didn't plan ahead for that, we wouldn't have enough appropriation in the event that we needed to pay for this.
Yeah, I'm all for you doing what you have to do.
Okay.
And I don't question that. I'm just, and I have not yet heard whether or not there is any money available from that 5.7 for us to use in this fiscal year.
Okay.
That's how I read that subject matter.
Yeah, we can just break them down by transfer and let you know if there was change from a project that we rolled back, or if it indeed got spent one place or the other.
And basically, to answer your question, which Terry will get to you, there is no excess money available from that 5 million.
Excess meaning what?
That we hadn't planned on spending and that hasn't been budgeted.
Yeah.
It's for, most of it's for, well, all of it's for specific projects.
Yeah, if in fact we budgeted for a project and it came in less than that, then there's additional funds.
Right.
And I agree those funds could be used for something else, but before they're used for something else, I'd like to know about that.
Okay.
Okay?
Absolutely.
Because we may want to do something else with it.
Well,
All right? That's a big number to me, 5.7 million. And I know much of it is probably administrative or technical to you, but it's dollars to us.
Yeah, I think it might be helpful to, on the project report, as they're closed out, when that situation happens and we roll it back to fund balance, that maybe that would be a place to make the information available to you. It just, otherwise, it's,
Yeah, I think the value, pretty much following what you're saying, Mayor, is on the projects themselves. I mean,
One by
did they
one.
hit goal? Did they come in under goal? And if they did, what's the money before it gets spent or anything else?
yeah.
And what it can be spent on, because some of those funds, if they happen to be in a impact fee fund, can only be spent for that type of project. So, you got to get specific too, and what that fund happened to be in, and what that money can be used for. But the key would be is if it comes in under what that is, and how much we have.
By individual project when it happens. Yeah, out of all the lines, there's only 2 in general fund, so most of them have
That's not the
restrictions
only
with
fund,
them.
but
so.
yeah.
Yeah, and this is a consent item, and I was going to pull this because I wanted to discuss what we discussed.
Okay.
But I don't disagree with your transfer. I just like to know what the money is that may be available, and where is it? And we'll deal with that later, but certainly we can transfer it. All right?
Yes, it keeps the appropriation in the right year.
Yeah, Terry, another example is
And
in
make the
batch,
mayor happy, come up with $5 million.
in batch number 1607, the 201,000 from the LTAF funds for the park and ride. Now, is that because?
What is that, 16?
1607, it's on the last page. Is that transferred into that fund to pay off the park and ride because it is being completed at this time? Or is that money left over and the park and ride is done and that is extra money after that wasn't used in the park and ride? I can't tell whether that is going into that or out of that.
No, what it's coming from, there was a general fund contribution and budgeted in this project.
Right.
And we moved that funding into an LTAF fund, which is
So-
to be spent for transit. So it's staying in
Well, I
the
realize it's not
project.
going anywhere.
No, it's just going from general fund, which was committed to pay out of, into the LTAF fund.
Into that fund, right,
So,
to pay,
and it'll be paid
that's
out
the
of
final
there.
pay, yeah, because
I
this
don't know if
project,
it's final, but,
well, it will be,
okay.
oh, see, it's the match, that's right. But that's being put in there because the project will be completed by the end of this month, or by the end of this year, within this quarter. Right?
Project will be completed, correct, and it'll be expended in that project. It was a grant that was related to.
Ken, if you want to say something, please come up.
But it's the matching funds for the LTF grant
Yes.
that came in, and
Yeah.
so now it's the city's turn to put that in. See, this was hard to read. Is that coming out or was that going in?
Yeah, it was going into that project. It was allocated to that project. It was a grant that was allocated to the park and ride. And the city match was $100,000.
Right. I understand. So this is the last, or this is 200. That is it in general, or is there more? Is there less?
That's it.
That's
That's
it. Okay. Thank you.
Mayor, did you have another? Were you finished?
No, I'm fine. Finished, thanks.
Well, Terry, thank you for clarifying the, I was, Mayor, thinking that you had, just by inadvertently left out that we had these bills that all of a sudden came up you know, that nobody was prepared to pay. So that was what was concerning. And the only other one I had was, it stated that there was a $63,000 enhancement to the court.
What's that batch number?
I didn't write that.
Oh,
Right there on the
actually,
left
that-
side. It says
That's
batch
to
number.
establish a fund so that we can segregate, there's money that comes in from, it's CJEF money, and that the court has specific guidelines and criteria of how they spend that, so we've segregated that funding.
306, ma'am.
And that's to establish that fund with that appropriation so that they can do these types of activities.
Okay, go ahead.
The court gets a certain type of funding, it's CJEF funding. I'm not sure if you're familiar
Okay.
with it, Jeff could explain it. But it's restricted for use. And so we've designated Fund 115 as the fund that's going to track the revenue. This provides the expenditure appropriation. Again, it's revenue backed. We have the cash. This provides revenue or the expenditure appropriation to allow them to spend this funding on these type of activities that are restricted in nature.
Well, I saw court enhancement, and I thought you might have gotten new carpet or something. So I didn't know what that meant.
I think he probably has a plan for that. I think.
Okay.
Anyways, it's 63,
So it
but that
is-
is what it's for. It is for
I
court
understand,
enhancement.
I appreciate that. Thank you. Okay.
Are there any other questions from council on this particular subject of these transfers? Because it's on your consent agenda. It's an easy way to handle it right now if you have any questions. Okay. Back to you.
That concludes my presentation.
Oh, okay. Any comments or questions for? Okay,
Thank you, Terry.
so,
Thank you, Terry.
okay, we had that one item on our work session, and after this work session, we proceed immediately to the regular meeting, which should be very brief, I would guess. And if you have any reports on current events, we'll take care of those in the meeting, okay? So I'm going to adjourn the work session, and if everybody's willing, I'll go right to the regular meeting. Ready over there? Good. Okay.